Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Ritu Singh. These are the top headlines from the startup space. E-commerce platform Meesho's 5,400 crore rupee IPO is fully subscribed on day one. Retail portion gets booked in the first hour, but higher allotment to local funds draw the ire of some global investors who walk away from the anchor book. Reply All, an apparel brand focused on all-day clothing, has raised 6.8 crore rupees in its first funding round led by Sparrow Capital and Antler India, with participation from Bharat Founders Fund, DevC and several D2C founders. The proceeds will be used for product development, expansion of the material and design pipeline, and scaling the brand's presence across markets. Former Indian cricket captain MS Dhoni has invested in Super Health, the healthcare model built around zero wait time and fixed pricing. Super Health has launched its flagship facility in Bengaluru as part of its plan to establish 100 hospitals across India. Amazon throws down the gauntlet to Microsoft, Google and the entire AI ecosystem, announces next generation of chips, large language models and AI agents at the annual Amazon Web Services Summit in Las Vegas. Anthropic, the artificial intelligence startup backed by Google and Amazon, has hired the law firm Wilson Sonsini to prepare for an initial public offering that could take place as early as 2026, the Financial Times reported. The startup has also discussed with major investment banks about a potential IPO. Well, those were the headlines we've been tracking for you this evening. On the hot seat today is a founder addressing one of the most underserved but critical gaps in healthcare: automation in histopathology, the core of cancer diagnostics. Deep tier healthcare automation company Morphle Labs is building next-generation robotic and imaging systems for tissue diagnostics. The venture has raised $5 million in Series A funding from Inflexor Ventures to take its physical AI platforms global. Its flagship products, Robotome, a robotic microtome, and Morpholens, a high-throughput slide scanner, claims to ease a global talent crunch in pathology and dramatically cut diagnostic turnaround times. Now, to tell us what this fundraise unlocks and how Morphle Labs plans to redefine tissue diagnostics globally, joining me now is its founder and CEO, Rohit Hiwale. Rohit, welcome to Startup Street. You describe, Morphle as building physical AI for our viewers. What does physical AI mean in the context of healthcare, and how will Morphle systems move the needle on turnaround time and diagnostic accuracy for cancer patients?
Yeah, hi. So physical AI is basically, you can think of it as intelligent software with hands.
Okay.
And right from the simple pick and place modules to, very complex, handling of really fragile material, which is a must have in a world of biology or healthcare. I think that is where the lot of juice is in terms of, going to the next level. So that's like the basics of physical AI for you. Yeah.
All right, Rohit, let's talk about your flagship products. While Robotome claims to slice biopsy blocks at twice the speed of an experienced histotechnologist, Morpholens claims it can digitize 100+ slides an hour. How do the two platforms integrate to create an end-to-end automated workflow? And what are pathologists telling you after using them in real-world labs?
So I think healthcare is one industry where there are a lot of bottlenecks in terms of, despite having the smartest doctors across places like India and US, there is like a lot of backlogs in terms of, the back-end work, which feeds the doctor, So basically there's a lot of grunt work that needs to happen before the doctor can, solve that beautiful puzzle that they like to solve and of course help the patients. But there's a lot of back-end, which is pulling the whole healthcare system back. And I think these two platforms combined are kind of solving that critical gap. This is like the slowest moving step in cancer diagnostics. People have weeks of wait times, and that whole wait times will actually come down to days, and even maybe 8 hours, in hours.
Sure.
So I think that's a big deal. So doctors can make the patient happy, and our job is to make the doctors happy. That's as simple as. Yeah.
All right, let's get to this funding. You're scaling manufacturing to meet rising global demand. If you could elaborate on those plans, what does the order pipeline look like in the US and Europe?
So we have a huge pre-order pipeline of, pre-orders,
Yeah.
100 plus customers waiting on us to deliver. This is like a very um, um, surprisingly good uh,
Yes.
demand from the market, I would say, like, because the problem is real and the need is so urgent that there's a huge pipeline. We have deployed the first cohort of machines, and the response is like pretty amazing. Like, people have already seen like backlogs being cleared off, getting like super consistent quality. And I think that is something people thought would not happen for next 10 years,
Sure.
at least. Yeah.
So how soon will the product rollout happen?
So the real product rollouts will happen in Q2 of 2026.
Okay.
But we have the first cohort already running. Like, it's like beta testing happening at multiple labs in the US to begin with, and like we have a big plans in the Europe as well.
Okay. Morphle has filed over 80 patents across robotics, optics, and imaging. And,
Yeah.
you touched upon this earlier. With 60% of global labs reporting unfilled positions, the need for automation is urgent. So what's the
Yeah.
core IP moat you've built that competitors can't easily replicate?
So I think I would say the core moat is the right combination of hardware and software. Uh, that's a like having the best minds in both the worlds, and making them work together, and actually uh, taking the this whole hybrid approach to the next level. That has been the core moat.
Hmm.
And everything that we do is kind of unique because the problem we are solving is so unique. So we stopped at 80 because we ran out of money long back. So,
Okay. All right.
but yes, I think so. Yeah, there's a lot of depth to the innovation that we are doing, I would say.
And hopefully, we'll see a lot more happen in the future. But you've got two flagship products as of now. What are the
Yeah.
next broken links in the diagnostics chain that you want to fix? And what might a fully automated, integrated tissue diagnostics workflow look like, let's say 5 years from now?
Yeah. So we have automated the second half of tissue diagnostic workflow.
Hmm.
There is a first half, like which feeds to the robotome, the slicing machine, like right from the surgeon's biopsy, processing that biopsy, fixing it, orienting it in wax, creating this something called as a tissue blocks.
Hmm.
The that creation of those tissue blocks is not automated right now, and these are again like pretty difficult problems to solve, as difficult as autonomous robotic surgery. So that is the first half, which is still unsolved. We are doing the second half, which is the more juicy one to begin with, the bigger need. But the first half is still like wide open.
All right. On that note, it's time for me to wrap up this conversation. Many thanks, Rohit, for joining us on Startup Street, and wish you the very best with all your growth plans.
Thank you. Thank you, Shraddha. Thank you. Bye-bye.
With that, it's time for a short break. But coming up next, Absolute is gearing up for global expansion on the sidelines of the IVCA Green Return Summit 2025. We catch up with founder and CEO Agam Khare to learn more about the company's growth plans. Stay tuned.
Well, homegrown consumer-focused VC firm Fireside Ventures has announced the final close of its fourth fund with a corpus of 2,265 crore rupees, or about $253 million, which was raised through its GIFT City Feeder Fund and India Master Fund. Now, Fireside Venture Fund 4 has secured commitments from a diversified base of Indian and global investors. Since its inception in 2017, Fireside has been the first institutional investor in more than 74% of its portfolio companies, and now backs more than 60 consumer brands. Now, with this fund, its total assets under management to date stand at around 5,300 crore rupees. But for more on the investment strategy for this fourth fund and more, joining me now is Adarsh Menon, the partner at Fireside Ventures. Adarsh, welcome to Startup Street. Thanks for your time here. You know, this fourth fund at $253 million, I believe, is your largest fund yet, and you've raised this from both global and domestic investors. How hard or how easy has it been to raise this kind of money, and what's the sense you've got from investors, especially globally, about the confidence they have in India's consumer story?
The story is very strong, Ritu, and that has helped in us actually raising this fund in pretty quick time. But it's also a validation of a couple of things other than just the fundraise, right? The first thing is the vision with which Fireside was started 8 years ago, which is to build a portfolio of iconic brands and, importantly, an institution that is designed to make that success repeatable. That has gotten demonstrated in the track record of the fund so far, the 8 years that we've been in business. So I think that has clearly helped in generating a lot of investor interest, both from India as well as abroad. And the second thing, and you allude to it, is the India consumption opportunity is really, really large and exciting. We are very confident that over the next few years, India will become a $4 trillion consumption economy, right? That makes India the single largest, fastest growing consumer market. And that again, obviously generates a fair amount of investor interest, and everybody wants to be part of the action.
Well, Adarsh, if you really talk about the investment thesis for this fund, I mean, where are you going to bet the money within the consumer segment, of course, which is what Fireside does? What will be the focus categories?
So we continue to be a consumer-focused fund, Ritu, because we believe that the consumer opportunity in India itself is just about, we're just about scratching the surface, right? So, you've tracked the fund for over the last 8 years. When we started, we were largely, doing India 1. Then after that, just as part of regular migration, we went to India 2. In Fund 3, we've done a few investments, which are both India 1, 2, and 3. In Fund 1, most of our portfolio were largely what were called D2C brands. Fund 2, we started investing in companies that also have an e-commerce business, that also have retail. Fund 3, actually, we've seen businesses who've also gotten built out in a very big way on quick commerce. What's also happened is over the period of the lifetime of the fund, the sectors that we've invested in, while they've all been consumer, the sector has now expanded from just pure FMCG to also vertical commerce, lifestyle, food and beverages, home, fashion. I think consumer in general is a very, very exciting space for us. And we see ourselves doubling down more and more in the consumer space itself across categories.
All right, got that. But what's in the pipeline in terms of investment? Have you already lined up some companies? And how soon before you start deploying the money? And also, what kind of returns are to be expected from this fourth fund?
So it's an ongoing process, right? The good thing is we are seeing a lot of very high quality entrepreneurs embrace entrepreneurship. A lot of them have very good pedigree from great quality institutions, great work experience, so they're very savvy in how to build businesses, attract large teams, run companies very well. So we are seeing high quality entrepreneurs. So the deal flow process, as it's called, is ongoing. Right, so that those thesis areas and those areas of opportunity and that pipeline is something that is ongoing now for quite some time. See, in terms of returns, if you look at our track record, Fund 1 has now been, Fund 1 is a 2018 fund, so we are now in the 7th, 8th year. We've already returned more than 3.5x of capital of Fund 1.
Fireside has been an early investor in companies like Mamaearth, Boat and whatnot. But with consumer behavior shifting so quickly now, where do you others see the next breakout categories emerging in 2026 and beyond?
So several consumer spaces, Ritu, we believe will become very, very large in terms of where they are today and where they can go to. We think the entire health and wellness space, where consumers are getting increasingly more conscious about health, wanting to take their health in their own hands, looking at health and wellness as a continuum as compared to just eating healthy, but also devices, also services. We think that space is going to become really, really large.
Well, Adarsh, even as you say, you're just scratching the surface. Your AUM is now about 5,300 crore rupees. How do you see this growing over the next few years? And how does Fireside avoid this classic VC challenge, that is more capital chasing limited high-quality consumer companies or opportunities?
Yeah, if I look at our pipeline today, it is certainly not limited. Like, see, there are 3-4 things which I think are coming together wonderfully well for the ecosystem. Of course, there is consumer demand and there is consumer traction. And the fact that while the numbers are very exciting in the sense, $4 trillion of consumption in the next 4-5 years, that's a very big number in itself. But to me, what is personally even more exciting is that the shape of this 4 trillion will be very different from what it is today, which means there will be a lot more Gen Z consumers, which means there will be a lot more senior consumers, which means there'll be a lot more Bharat consumers, which means there'll be a lot more online consumers. So the shape of that consumer will start looking very different. I think that makes it so exciting, which then translates into so many more opportunities for brands to get built. The second thing is, I mentioned it earlier, high quality entrepreneurs, choosing to embrace the startup journey and become entrepreneurs. And then, when we jam with them, the quality of that conversation is just so rich. Third, of course, now to build a brand digitally is so much easier than what it used to be earlier, right? Thanks to Meta, thanks to quick commerce, thanks to e-commerce, thanks to Google. I think all of that ecosystem is coming together really, really well. If you just now combine all of this put together, I would say it's still very much scratching the surface, and there's just a lot of opportunity in the coming years, and I would say decades, for Indian consumer as an overall business.
All right, Adarsh, we'll leave it at that. Thank you so much for your time here on Startup Street today. Thank you.
Well, moving on. Absolute, founded by Agam Khare, is using microbes as microfactories to create biological alternatives to chemical farm inputs, whey protein and even leather. With 12 products in market, 20 lakh farmers using them and a pipeline of 400 plus biotech solutions, the company is now preparing for global scale. On the sidelines of the IVCA Green Return Summit 2025, Agam Khare tells Aishwarya Anand what's next. Take a look.
Agam, give me a sense of what Absolute does. What does your business model look like? How many verticals are you running? Just give us a sense of what the company does.
Absolute is primarily a biotechnology company. We use microbes as microfactories to create biological solutions to very large problems that our world faces, primarily in areas of agriculture, where we make alternatives to harmful chemistry-based farm inputs that go into agriculture. So we make biofertilizers, biopesticides, biostimulants, not me-too products, but very deep R&D-driven, extremely high efficacy-based products which can meet the parity of chemistry efficacy or be better than them. Then we have a second vertical where we create novel proteins. India does not have whey protein, for instance. So we make whey protein using these microbes through route of rapid fermentation. We make other proteins which can replace sugar, which are the exact replica of taste of sugar. And then we make enzymes and proteins which can have anti-inflammatory property and can go into therapeutics or OTC. And then we have a work around materials where we use the same science to basically make alternatives to leather. And we have made alternatives to calf, ostrich, and crocodile skin.
So how many products have you shipped till now? What does that number look like?
So we just went live with our agriculture products about 2.5 years ago. So about 12 products are now live in market. One of our product, which is a DAP alternative product, a biological product, has become super hit with farmers in India. Almost 15 lakh farmers in India bought it the last year. Almost 3 times that number should be buying in this year. 20 lakh plus have already bought it this year. So that's one of the flagship product, for instance. And then there are 12 products in market on the agriculture side. Our protein products are now hitting the market. We have already got a large order volume from leading companies in India. And now we are looking to supply also in Middle East and the other parts of the world.
How many farmers are you currently working with? What kind of impact have you created on that front?
So as I said, last year about 15 lakh farmers bought our products, but we are also demonstrating at the same time to many more farmers. So we typically work with close to about 30-40 lakh farmers between that number today directly, and we run demonstrations with them. We give these biological inputs to them, but since we are already working with them, Absolute was based in the thesis of solving problems for farmers, not just selling a product. Okay. So when we go to work with them, we also engage with them on many other layers. So for instance, getting additional revenue through the carbon credits, for instance, and thereby doing agroforestry on their periphery of farms. That's one of the big things we have done so far. For instance, this year alone, we have enabled these farmers to plant more than 3 million trees, 30 lakh trees across their periphery of farms. We are going to sort of plant before March another 2 million trees. So that's one of the additional incomes that farmers who are pursuing these inputs can also pursue. It becomes sort of either a recurring revenue because these are fruit trees, so they can have recurring revenue. It also helps our input business to be sort of more stable and go at scale. Then we enable these farmers to do biochar, enhanced rock weathering, whatever helps them earn more revenue on that acreage. We give those additional facilities to those farmers.
I think the last you raised funds was in 2021? 2021, end of 2021. It was $900 million.
No, it was about $100 million.
It was about $100 million. Okay, all right. I want to understand where did you deploy that capital? Are there plans of raising funds next year, next year? Is another round of fundraising on the cards for you?
Most of the capital, since we are an R&D company, goes into doing R&D and regulatory needs that are there in India and the rest of the world, wherever we want to launch our products. So that's the large part of capital deployment. Then some part of the capital also goes into running demonstrations to people, because only once they see, they believe, that's when they pick up the products. So that's where we have spent most of the capital of what we have raised. We probably may not raise in the near future, but as we go along and if the business needs, we will definitely look to raise more capital and solidify our presence as pioneers in this area.
So which means you essentially have enough capital in the bank right now.
That's right.
Okay. Talking about that, also help me understand, where does your revenue currently stand? Are you profitable already?
On an operating EBITDA level, we are already profitable, but because R&D takes a lot of money before it can yield enough results, therefore, on a pure PAT basis, we may not look profitable, but then by Q4, our view is that the company will turn PAT level profitable by the Q4 of this year.
What does the next 3 to 4 years look like for you?
So we have built a very large repository of these novel microbes that we have sourced from across the world. So this library we call as Nature Intelligence Platform today is about 50,000 unique species of microbes, strains of microbes. And these microbes can then be used as microfactories to create a variety of solutions. That has resulted into us having a very strong pipeline of over 110 products across range of these 3 sectors. That places us in a very strong position for future growth. Our regulatory needs for a lot of these products are already met. Some of them are very close to being met across range of countries. We have got permissions in as far as in US and about 10 states to supply our agriculture products. We have massive permissions across India, across Middle East and Southeast Asia. So we're looking to spread our wings now.
Moving on, e-commerce platform Meesho's 5,000 crore rupee initial public offering was subscribed over 2 times on the first day. Retail investors showed strong interest in the offer, with their portion being subscribed 3.85 times. The quota allocated for non-institutional investors was also fully booked. The e-commerce major raised close to 2,500 crore rupees from anchor investors ahead of the IPO. Well, the Indian IPO season has been exceptional, but for Peak 15, it has been transformational. With 3 back-to-back exits and the currency tailwind working in their favor, the firm has bagged gains that look large in rupees and even larger once converted to dollars. $3 billion, that's the pot of unrealized gains the fund is sitting on. Rachna joins us now.
What we're seeing here is not just a strong IPO market, but a rare alignment of timing and currency that has dramatically magnified Peak 15's returns. Peak 15 first backed Grow in 2018, investing up to 50 crore rupees at a time when the dollar cost only 64 to 69 rupees. When Grow listed, the firm realized 1,580 crore rupees. This was at an exchange rate of 88 rupees to the dollar. That works out to about $159 million. Early dollars in, high-value dollars out. That's the underlying story here. Pine Labs shows how long this currency advantage has been building. Peak 15 invested in the company across 3 cycles. First in 2009, when the rupee was between 48 and 50 rupees. Then in 2013, when it was 54 and 58. And again in 2016, when it was at 66 to 68. At the IPO, their exit was worth 510 crore rupees. That converts to roughly $58 million at today's rates. Capital deployed in India's strongest rupee years is now being monetized in India's weakest rupee years. And that alone boosts the fund's dollar returns. Peak 15 similarly entered Meesho during 2018 and 19, when the rupee traded between 68 and 72. Their IPO cash out, which was soon, would be around 190 to 200 crore rupees. translating to about $21 to $22 million at 90 rupees to a dollar. Again, early entries when the rupee was firm, exits when the dollar buys you far more. And Wakefit would follow the same pattern soon. Peak 15 backed the company between 2019 and 21 when the dollar was around 70 and 72 rupees. Its upcoming offer for sale for 397 crore rupees comes at a time when the dollar is about 90 rupees. Put all of this together and the picture becomes clear. Peak 15 has not only timed its startup bets well, it has timed its currency cycle exceptionally well. Money invested when the rupee was strong and realized when the dollar is at its peak has turned good exits into great ones. And the numbers really underline that. Across Grow, Pine Labs, Meesho and Wakefit, Peak 15 has realized close to 2,500 crore rupees this IPO season. And that's just this quarter. We still have the IPO season ahead of us. And this is actual cash that they have booked out. On the other side, the value of what the firm still holds, the unrealized part, is now approaching $3 billion or well over 24,000 crore rupees. Taken together, these exits represent one of the strongest return curves in recent VC memory. Peak 15's combined investment in these companies sits at roughly 800 crore rupees. And against that, the firm is staring at more than 30 times in value between realized and unrealized gains. Back to you.
Well, thank you, Rachna, for those details. Appreciate you joining us. And with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side.